So you've been pre-approved for a mortgage at 5%. But when you go to make an offer, you're told you can only afford a home as if the rate was 7%. So what's going on? It's the mortgage stress test, and today we're going to demystify it completely. Hey everyone, I'm Dana Gain, an award-winning real estate broker and author. The stress test is probably the most misunderstood rule in real estate. It's confusing, it's frustrating, and it's the reason why many buyers can't afford the home they want. But it's not a mystery, it's just math. And once you understand the math, you can create a strategy to beat it. What is the stress test? In simple terms, the stress test is a what-if scenario. The government wants to make sure you can still afford your mortgage payments if interest rates go up. So your lender has to qualify you not at the interest rate you're getting, but at a higher qualifying rate. As of late 2025, that rate is either your contract rate plus 2% or 5.25, whichever is higher. With rates between 4 and 5% right now, that means you're being tested at 7%. So how does this affect you? This is the key part. It reduces your borrowing power. So let's say at a 5% rate, you can afford a $600,000 home. But when the bank tests you at 7%, your payments would be much higher. To keep those hypothetical payments at a level the bank is comfortable with, they have to reduce your total mortgage amount. So at a 7% qualifying rate, you might only be able to afford a $500,000 home. The stress test just cut your budget by $100,000. So the first thing you can do is you can increase your down payment. The stress test applies to the mortgage amount, not the purchase price. So every dollar you can put towards your down payment reduces the mortgage you need and helps you qualify for more. This is where gifts from family, RSP withdrawals through the home buyer's plan, or just aggressive savings can make a huge difference. Strategy 2, pay down some debt. Your lender looks at your total debt service ratio, which is your housing costs plus all your other monthly debt payments. If you can pay off a car loan or a credit card before you apply for a mortgage, it lowers your monthly debt obligations and frees up room in your budget. This directly increases the amount you can qualify for under the stress test. Strategy number 3, you can extend your amortization. If you have a down payment of 20% or more, you can get an uninsured mortgage with a 30-year amortization period instead of the standard 25. Spreading the payments over a longer period lowers your monthly payment, which makes it easier to pass the stress test. You'll pay more interest over the life of the loan, and that will be heavier in the first few years of the mortgage, but it can be a powerful tool to get into the market. Getting your financing in order is the first step to beating the stress test. My first-time home buyer's guide helps you create a budget. It's the perfect tool to prepare for your conversation with a lender. You can download it for free in the link in the description below. The stress test is a federal rule, but there are also provincial programs that are designed to help you. One of the biggest is the new HST rebate for new construction for first-time buyers. I did a whole video explaining how it works, and you can watch it right here. If you found this video helpful, don't forget to like and subscribe. Thanks again for watching, and I'll see you next time.